Hey everybody, welcome to the garden. I hope you're having a great day. Shout out to the lemon and lime lovers and everybody in between. It's time for a market recap. And if you're interested in any of the services I provide, please check out the links in the description below for both the Patreon and Discord. Okay, so we're just going to do a real quick video here. We're just going to go over the levels, what we're seeing, and then call it a day. So starting off with the dollar. Dollar's been performing as expected. We are trading in the blue zone still, which is a very, very important demand zone, support zone, buy zone, whatever terminology you'd like to use. This is a very, very active zone. We've been seeing price respected. Now, in the last recap, we saw that this is the protected low. We've made a new higher high from it, okay? And I had been saying we're going to be looking for evidence of a higher low forming somewhere in here, and that's what we're getting signs of, right? So we have a higher low from the protected low here, and if we have this continuously validated where we come up and come back towards 103.65, maybe 104, and maybe even going up to the 105.5 area again, what we will likely do is make another lower high from this higher high at 107 plus, and then create a much larger squeezing structure with another higher low like this. Okay, so crudely drawn, but something of this nature is likely to get built. That's the most probable path that I'm seeing for now. And if it does, the context will imply more bullishness because we're creating a floor up here rather than breaking down. So the probabilities will imply upside if we should build something like that. Okay, so even though it's not completely impulsively bullish, it will have more of a bullish tendency. Now let's look at the potential bearish aspect. So if we do break down and we actually finally take out this protected low at about what 99.7 99.6 give or take, if we take out that low, that opens the door towards us coming all the way back down, not just to here at 98.1 98 flat, probably sub 98, and eventually taking out these lows over here, going up that sell side liquidity at about 94.5. All right, so we do need to hold this low if you want to see bullish dollar. If we take out that low, it is pretty much over for a while on the dollar, and it's likely we're going to go up down towards 94.5 and maybe even lower. And that's definitely a possibility because we do have the Fed getting ready to start to cut rates. That doesn't mean it's going to happen this quarter, but it is very likely going to start this year. And if you've been following me for any sort of time, you know I'm bullish on dollar, but you also know I have been saying even before this year, well before this year, that the Fed would start to cut rates, that they were never going to raise rates again after that last time, and that since the Bank of Japan has stopped raising rates and they've actually started to ease already, they've already started to cut, that the Fed would follow, and it's been the correct thesis thus far, and I still see this happening. We have no risk now of the Fed raising rates again. They're either going to halt and stay flat, or they're going to start to cut sometime this year. I've been saying Q2 is when they'll do the first cut, but hey, maybe they'll do it sooner or maybe they'll do it a quarter later, but it is very, very likely it happens this year. So look out for that. That will weaken dollar unless the foreign demand for dollar can exceed that supply that will come onto the market, and that is a real possibility. I won't get deep into that conversation. I do talk about that on the Discord when I do live, so if you're not on the Discord and you would like to be part of those live streams, definitely come on in. You'll find the link to the Discord down below. Okay, so next is the Dow. So we're going to look at the Dow, S&P, and NASDAQ. Dow is looking very good. Still trading above the previous all-time high and going into a consolidation, right? It's been very stable, kind of chilling. What I foresee happening is actually some more downside, okay? So I am looking for kind of a slow mover coming back down towards that all-time high, coming to test that level. And I wouldn't be surprised if that level actually ends up breaking down and doesn't hold. What I want to see, though, ideally, so if you're asking me for my most ideal bullish structure, we've had this beautiful big move up, and I would love to see kind of a grinding nature like this, okay? Something like this would be the most ideal for me to see. So if we saw something like this, then I would say prepare yourself. We have a lot more upside coming in the short term here. If we don't see that, that's okay. The key is this low here does not get taken out. So as long as the low at about 32,300, give or take, stays protected, we're all good. Now there's a good chance we actually do a retracement rather than a consolidation, and we retrace usually back towards around the 50% uh, percentile of the impulsive move. So that's probably around this area here. Let's actually use a fib to get the exact level, just to make sure we're not quoting the wrong numbers here. So yeah, right around here, as I thought, about 34,973.8. So it's very common you'll see price come back to these levels here, this general zone. We even have a little bit of a fair value gap here, where it'll start tapping in here and create higher low from the protected low, and then lead towards continuation. So if this is going to lead towards a retracement, this would be the first area I would look for real signs of a slowdown on that selling, and then a continuation of the uptrend it is currently in. So still very bullish on Dow, but do not be surprised if you see either a consolidation or a retracement. And right now I would actually say a retracement is probably more likely, but it's very early on in the price action here. We have to let this mature out over the next couple of weeks. All right, let's go down to the S&P next. So S&P's actually had relative weakness to the NASDAQ and the Dow, right? It's the only one that hasn't taken out its all-time high, but it's trying. It's on its way, and I actually foresee this tapping through this level sometime next week. I do see this having a day where it will get through, even if it's by itself. And if that does happen, where it's just relatively strong one day, then be prepared. It's likely going to get pulled back down with the Dow, the NASDAQ. But there's a good chance that the S&P will take that all-time high, even if it's just a wick. Okay, but right now, looking at the price action, what does it imply? Again, very early on, very young, but it's not impulsive. It's most likely leading towards a consolidation. This, unlike the Dow, is far less impulsive. So a retracement is not as high on the list in probabilities, but it is there because the Dow can do it. The S&P would do it. Just like the S&P does it, the NASDAQ does it. So they all kind of pull on each other. But right now, looking at the price action and the context of this price action, I would say a consolidation is more likely for the S&P specifically, and it's still likely to see more upside, even in spite of a bearish day, maybe on the Dow and the NASDAQ, just to get over this all-time high and then pull back down. I'm still bullish on them all. Again, same thing with the Dow, with the S&P. Like, it has to, for me to flip bearish, you have to see that protected low getting taken out on the S&P. That's about 4,100, give or take. Okay, so to me, these are very, very clear uptrends that are just doing their thing. It's like there's no need to go all panicky when you see downside. Wait for the charts to tell you. Wait for those levels that are key to whether the trend's alive or not. Get taken out. There's no need to front run, because again, I've said this in the Discord. I've said this to anyone who would listen. Don't put expectations on price. You never know what it's going to do. It could always go higher, and it could always go lower. So just wait for key levels to get taken out, and then you should pretty much make your decisions from that. So we're looking at S&P, and we're looking really good so far. Next to the NASDAQ. So NASDAQ, just like the Dow, has taken its high. This actually reclaimed the previous all-time high and is kind of trading above it. But again, showing signs of a consolidation, of slowing down. We're not looking super impulsive right now, which is totally fine. And we're likely going to, in my opinion, squeeze on these guys unless the Dow has a really, really powerful drop. Okay, unless we have really, really powerful drops on the Dow, it's more likely that we're just going to see squeezing behavior on the S&P and the NASDAQ. Okay, so it's more likely we'll see stuff like this happening, and if we do, the bias will be bullish, and we just look for price continuation. We'll just look for more speculation, more price discovery, which is great. Okay, and if the dollar does continue to essentially get beaten down by the potential weakness from the Fed. I should say, I guess, weakness from the Fed. They can't keep up what they've been doing. We'll call it what it is. Then we'll likely see the risk on assets. So specifically the NASDAQ for sure will find a lot of money flowing into it, in my opinion. All right, let's go over towards oil. Let's take a look at oil, see how that's doing, see how that's developing. And oil, very similar to the dollar, in this major supply demand zone. A lot of buying here, a lot of interest in this area for oil, and in similar boat, protected lows, right? The protected lows right here, that's yet to be taken out, and we're in a very very high demand zone for oil. And unfortunately, like I've been saying, I do see oil going up because I do see the wars increasing, right? I see, unfortunately, I wish that wasn't the case, and I think we got some evidence of that already, where we've had bombings in Yemen from the U.S. and I believe Great Britain, which, and to be completely fair, not to get too political, those bombings from the U.S. are completely unconstitutional. I mean, the government is completely AWOL right now. They're not going through Congress on anything, and they're just friggin' attacking without following the Constitution at all. So, I'm not going to get too political here, but this is really really a bad sign for what's happening here in the U.S. That we have a government that's essentially just completely ignoring all the parameters it's supposed to be operating by, and it's very sad to see. And it just brings harm not just to us in the U.S. domestically, it brings real harm to a lot of people outside of the U.S. In this case, Yemen, and many other places, but this case, Yemen. So it is a very sad situation, and all I can do is hope and pray, and I hopefully as we come in towards the elections this year, that we get some real change coming into the government, because I think people are asleep at the wheel. We're not in a good place right now. We can't just be bystanders essentially anymore. People need to kind of start to wake up to the reality of the situation. And I do think that the oil price rising is going to be a really really powerful kind of wake up moment for a lot of people, because I think oil is going to have a massive move here that's going to go plus 100, all right, going into like the 120s. And when that rising in price happens, the cost of living, which is already increasing, is going to go up even more. And I think a lot of people are going to wake up to that this year. And I don't say that lightly, I don't say that with hopeful intent, but it is the truth in my opinion. Now, I will change my tune if we start to see oil take out this low here at 63.66 and really break under this demand zone, which is at the low of like 62.56. If that happens, you'll hear me change my tune, and oil will start to flip bearish in my eyes, just like how the dollar has that low. As long as both of them hold their protected lows, I'm going to be bullish. Okay? I'm going to be bullish. So next is gold and silver. So let's take a look at gold and silver. So starting off with gold, again, very, very strong retracement back up after this, I would say, straight up denial, kind of blow off top candle. But what did I mention in the last recap? If you go back, I said that you will likely see price trade in between this candle for the foreseeable future. And I mean for probably a very long time. Okay, so this candle here from the top wick to the bottom wick is likely going to play as a zone of trading, an equilibrium zone, where you're going to see prices trading sideways, right? And it's going to have most likely a bullish bias. Now, it's still too early to tell, but the probabilities are that it will have a bullish bias that will eventually lead towards the conquering of this high here, going up towards the 2200s and maybe even higher. And then we have a lot of fundamental analysis that suggests that as well. Again, the Fed likely going to cut rates this year, and then fear coming into the world because the wars are expanding. So gold has a lot of things going for it to increase in price, and I do foresee all those things happening. So I'm not bearish on gold. I don't think there's any reason to be bearish on gold. It's protected lows all the way down here around 1800, 1810. So just observe gold, let it do its thing, and then eventually it's most likely going to see upside beyond its high here, going into the 22s, 23s, and maybe even the 25s eventually. Next is silver. So silver, similar situation, just not as impulsive. Again, just talking about silver, it's going to follow gold, it's going to rhyme with gold, but it's not as impulsive. It's not near its all-time high at all. It's in this consolidation, and the consolidation is more neutral, but because silver does move with gold generally, it's going to have a bullish hue to it, a bullish bias, even though the price action specifically doesn't suggest that. And when I look at silver, yeah, the price action's not that bullish. Okay, it's really not. Now, it is interesting how this is formed, and pretty much these lower lows are being respected. All right, but other than that, the price action's very unclean, very toppy, to be fair. But again, it's gonna follow gold in the end. And if gold starts to take out 2,300, give or take, that's when I do think silver will get towards $26 and really going after these near equal highs all over this place. All these relatively equal highs, I think, are going to be targeted pretty quickly if gold gets that big move towards 23 and maybe higher. Okay, now let's get to Bitcoin. Oh, Bitcoin. So we have a lot to say on Bitcoin. I'll try to keep it short. Bitcoin ETF passed, right? So the spot ETF has passed. Congratulations. Big move. It's a big move for the crypto ecosystem, especially for Bitcoin specifically. So congratulations to anyone who's been around for a while, who's been really hoping for it. It's a really cool development for me. I've been in crypto since like 2017, early 2016. It never really crossed my mind that Bitcoin would get this far. I didn't think it was impossible. I just didn't really look out that far. But it's really incredible to see. Now, since that's come out, we've come down, right? So we've come into this this bearish monthly fair value gap. We tapped into it. And we got all as high as about 49,095, give or take, right? Yeah, 49,054. So that was about as high as we got. And what's interesting about this is many people are super bearish now, are super scared this is the end. Now, what I would say is it could be, but again, just wait for the chart to tell you. Now, for me, the protected low is right here. So now this low here is protected. So about 40,000, give or take, 40,100. But I'm rounding it down to 40,000 to keep it simple for myself. As long as that low stays relatively protected, where we don't get closures through it, then I still see the uptrend as being relatively fine. Now, the reaction here is a good reaction, and I'm going to explain why. It's a healthy reaction. Price coming into this is a major supply. Okay, let's go to the monthly real quick. This is a major supply zone. I just want to make this very, very clear. Look at this reaction. This is a good reaction from this area. This is what you would want to see. It's a healthy reaction. Now, can it be a top? Yes, it can be. We don't know yet, though. There's no point in assuming that. But if we look at the price action for what it is right now, we came into a bearish monthly fair value gap that's been completely unmitigated for years. Okay? For years. We come into it and we get a reaction that is very healthy. And what are we doing from that reaction? We've come down and now we're holding this order block thus far. Okay? It doesn't mean we will, but we are holding this order block thus far. So what have I been saying about Bitcoin and the bears? If you've been following my recaps, what's been their main issue this entire time? Really, since all the way back here, once we took out this descending trend line and we broke this consolidation bullish, what's been their main issue really since over here? Okay, it's been they don't get follow through, right? So you'll have big moves up and the consolidations, and you'll see big attempts from the bears to try and break the uptrend, and it never gets follow through. The bears never have the follow through. They tried a bunch in here, failed. They tried here, failed. Tried here, failed. And now they're trying again. Now, this doesn't mean they're going to fail here. However, because they have failed so much, wait for the protected low to be taken out. Wait for the protected low to be taken out. It's on them to prove that it's over. It's not on us, not me, not you, to assume it's over, because price can go anywhere it wants to go. Have no assumptions on price. It can always go higher as it can always go lower. We don't know. So wait for the key levels to get taken out to essentially tell you the probabilities have now flipped on this side. Now, if we see this rejection here, you don't want to see this happening. Okay? Like I said before, when we were doing recaps over here, you don't want to see this happening, where you have a rejection from a major level or you're rejecting from key zones where you don't get follow through. That's not what you want to see. Okay? If you're bearish, you don't want to see that. So what do they need to do? They need to make sure that there is no strength that comes in here. And right now, as of right now, they're not doing a good job. If we end up closing this way with a doji, that doesn't mean we're just going to fly up. But what does it kill? It kills the momentum. It kills the momentum. Now let's go down to the 4 hour real quick. And I want to really emphasize this. Look at this. Okay? Look at this. It's a very similar story. If you open your eyes and look, okay? Come to fill out this again, another big supply. This whole red zone right here was a big supply zone. See price come into it, fill it completely, and then rejection, and then what? Consolidation, and then it just continued higher. They couldn't break this. They couldn't break this specifically right here. Okay, consolidation, and then it broke up and then made near equal, pretty much a double bottom here. Okay, now over here, try again. You take out the buy side, the relatively equal highs here off of this rise. So you take out all that buy side, and then what? Rejection, and then bought back up immediately, and then what? Consolidation, continuation. And now they're doing it again. Hit this major supply, major supply zone, major bearish zone, and boom. And if we get the 4 hour to do what? Essentially consolidate again, holding this zone, what do you think is going to happen? So we have to be very, very calm when we look at this stuff. Okay, we really do, because this is not a good sign for bears if they can't get follow through. And we're already starting to see those signs. Now, it doesn't mean we won't. Okay, I want to make that very clear. We have to respect that it will happen eventually, but it's not happening yet. So wait until those key levels, specifically 40,000, is taken out. And that's when we can really start to look for a lot of major reversals in a lot of coins, not just Bitcoin. But right now, that's not the case. Now, what does this ETF actually do? So this ETF is very bullish. I want to make it very clear. I'm not going to get too deep into this because I wanted to focus on the charts, but I just want to talk about this just a little bit. The ETF is very bullish because it is a spot ETF. So that does mean when you're buying that ETF, the equal amount of physical Bitcoin, in this case just spot Bitcoin, gets taken off the market. Okay, so that will constrain supply of Bitcoin if people buy or institutions buy those ETFs, which we know they probably have been doing before it became public, and they're probably doing it a bit after. So, that will constrain supply. So that will show in demand. If it continues to rally up the demand, then you're going to see with a constraining supply, price will go up. So eventually it will lead to bullishness that will probably bring it towards higher levels. Okay, I won't get into specifics. I go more specifically into the Discord, but when I'm making these videos, not so much. So again, another plug. Join the Discord. I'd love to have you so you can talk to me more and get more of my opinions, and I can definitely hear yours more clearly as well if you're interested. But Bitcoin's bullish. Okay, in my opinion, Bitcoin's bullish. Don't get too obsessed with what's going on. There's gonna be a lot of opinions out there. Wait for the chart to tell you, and I would say wait for 40,000 to get taken out. And that's when you can start flipping bearish short term. Until then, sky's the limit. We don't know what's going to happen. And if we look at the market today, just quick look at everything. Again, everything is. Yesterday was a pretty negative day. Now we're having a slowdown day of that selling. Some are reversing quite positively, like APT up 13.5%. Chile's up almost 9%, and then some are just relatively flat, still negative, etc., etc. So we have a lot of different mixed bags here, but it's not ultimately bearish. Let's look at Filecoin real quick, because this is actually one of the free trades I posted in the Discord for everyone. Filecoin, again, very similar. Everything is still it's not major rallies happening yet. Okay, look at this. If we pull out here, Filecoin's still in its weekly consolidation here. There's so much room still to the upside that I'm telling you. Be patient. Wait and see what the charts say. Specifically, wait and see if Bitcoin takes out those lows. And if it doesn't, be prepared. 50,000 is on deck. 52, 53, 55,000 is on deck. And if that those ETFs, I should say, continuously perform as they are over the next couple months here, we will likely see Bitcoin taking the all-time high. Okay, we will. Now, that doesn't mean it will. Okay, a lot of things can happen. We don't want to have assumptions, but the probabilities are on our side for continuous bullish action in crypto. Okay, we are on the side of bullishness right now, so we're not against what's happening. If that should change, guess what we're going to do? Because we're traders in the lemon garden, we're going to switch up. We always do. We are along 100% on the market for crypto. Okay, all these are longs. We have all these are longs, no shorts right now. That doesn't mean that we're completely throwing risk out the table. We only have like 20%. Well, at least I only have about 20% of my account in the markets. And we've taken profit off a ton of these, and they're all at no risk at this point. So again, it's not about having as much of your money in a potential bull run or bear market. It's about being in a controlled manner, making sure you're on the right side. If you do that a couple times, you'll find that the little money you might use relative to all the money you have will turn into a lot of money relative to all the money you currently have. Okay? And I want you to keep that mentality if you have trouble with that. Less is more usually. And if you're consistent and you focus on the process, the end result will take care of itself. Okay, if you're interested in more in that, I definitely could help you out with that. I do tutoring services. You can check out the links down below for more information on that. And even then, if you don't want to do anything with my premium services, just join the Discord where I do live streams for everyone. You'll hear me talk a lot about the things that I do teach anyway for free. So again, you'll find the links to the Discord and the Patreon down below. All right. So everyone, that's it for the day. Thank you for hanging out with me. Thanks for these last 2 years. We've been doing it for 2 years. It's been a very very fun journey. I've learned a lot, and hopefully I've affected people positively, not just in their trading, but also just in life. Hopefully people are getting better in all aspects of their life. I know the Discord has helped me do that for sure. And again, if you have any questions or you disagree with me about anything, please leave a comment down below. Obviously, you can always join the Discord if you're not in an array. It's the best way to get in contact with me. And I love to hear other people's opinions, and I love to hear what people have to say about what I'm saying. Whether they're challenging me or they're in agreement, I like the contact. I want to hear it because it helps me learn and be better. So, guys, remember, be patient, be vigilant, and be nimble. I love you guys. Take care.